Hey there, subscribers. Thanks for joining. Appreciate the comments, and leave me a thumbs up if you like the content, if you're finding value. If you're new to the channel, what I do on this channel is I analyze the charts. We use technical analysis to give us an idea of where the stock market's heading. We saw this crash coming. I put it out in several videos. I put out videos saying I think this is the top of the market. I'd explained why using technical analysis, and we were right on that call. So if you've been following along and you've been trading, then perhaps you caught some of this crash with some short positions like I did. Again, we use on this channel, I'm going to use primarily technical analysis and reading what the charts are telling us to help us make anticipation decisions, anticipating where the market's heading in the future. And then I mix in a little bit of fundamental analysis to help me gauge my macro thesis, using a lot of different technical indicators and just fundamental indicators to help me get kind of a general macro thesis of where the market's heading. And then we narrow it down to technical analysis to help us understand when to trigger trades or when to take positions. So let's get right into it, and give me a thumbs up if you find value in the content. Here we go. Let's start out with the bonds, BND. And the bonds here, you can see over the last few days, they've started to kind of catch a bid, catching support. This is the Federal Reserve buying up the bonds. They announced huge QE programs. They're throwing a ton of cash at the at the bond market, and that's what we're seeing here. We're seeing the Fed bid up the bond market and try to hold it up. So don't take this price action for full market participation. This is for the most part the bond. This is the Fed. So the point is, though, is I still see a pretty substantial break in the bond market, and I think this was the first leg down. This is the Fed coming out with QE1, and I think we're probably going to see more selling in the bonds. And as that continues, that's going to put pressure on the interest rates. Interest rates are going to rise, and given that this market is so indebted with corporate debts, and there's the corporate bonds, rising interest rates will perpetuate this economic recession that we're going to go into. So keep an eye on that. That will be a clean tell as to a continuation of the worsening of the situation. Right now, everything's focused on the coronavirus, but the reality is that I think the coronavirus has just created the first leg down in the bear market. And once that kind of starts to clear up, we'll start to hear about financial institutions really starting to suffer, earnings downgrades, all the negative economic impact that this has had, and that will create probably the next leg down in this bear market. So let's look at Nasdaq futures. We don't need that. That was a fib retracement I was looking at. But the point, we don't even need this. Nasdaq futures working their way down in this channel. You can see pretty clean channel right there. Down near the bottom, in reality, I think that it probably makes sense to not be short here just because we're close to the bottom. I think we're probably we're really oversold, and I think we're going to have somewhat of a bounce. So I actually took a long position at the very end of the day today in triple Qs. Here's triple Qs, and I'll show you why. We've crashed straight down from the highs in triple Qs, a total of 28%, almost 29%. Massive crash in a very short period of time. And that's to be expected because you had so much money pumping up this market. You had tax stimulus pumping up this market. Everybody was pumping this market up, and everybody was completely on the opposite side. They were long. And I know that because I was continuing to tell people for a while now that this market's going to have a massive crash because the charts are broken. And I got ridiculed quite a bit, by a lot of people saying, "Oh, why you're always looking for the short? Why are you looking?" Well, I'm looking for the short because figured it was coming. I didn't know it was coming. The probability was to the downside, okay? It's not the fact that I knew that we were going to have a crash. I just, the charts told me that there was a lot more potential for a big market move down than there was for a big market move up. And so probability was in my favor to have a large move down. And, that's kind of what we've gotten so far. So this move down has broken all the charts, all the bullish charts for the most part. There's still a couple of really long-term charts, but this move has broken most of them. And that's this red, trend line. This is your bull market, decade-long bull market. And we broke that right here. So watch old videos. I talk about the longer term stuff, but for now I want to get into the shorter term stuff. So here's your daily chart, and we got support right here at 169.30. And you can see we tagged it right here, So what can we expect? Well, we've fallen through all these support levels with really not much of a reaction. We fell right through this one, Now we're at this one. One of these are going to hold, and we're going to probably have kind of a bear market rally, which they can be pretty vicious. They can just go straight up basically, and one of these are going to hold. So what do I see? Well, if we gap down tomorrow, let's say we gap down just barely though, not a big gap down, just a little bit below 169. And when the market opens, it will gap down. You'll probably see, the initial move will be to the downside just a little bit, and then the buyers will step in and smash this market higher. There's a potential for that. That would be something I would expect, because a gap down with a little move lower tricks the shorts, keeps the shorts in there. People jump on short thinking that we're going to go a lot lower, and then that's usually when they kind of reverse it and have a reversal. So I'll be watching for that. If they don't do that, then maybe we just gap higher tomorrow. We could easily gap higher and then start to rally. If we gap higher, that would mean that this held this 168.90. So a gap all the way up to 182.20, or a gap just slightly above, and then we rally up to 182. I could easily see that happening. And we could actually, when we kind of get that first kickback rally, that bear market rally, I could see us getting all the way up to 192 potentially, or possibly even all the way up here to we could even do a full back test of this trend line up around 200. So watch for that. There's potential there. Look at the RSI. The RSI here on the daily is down at 30. We were down at 26.17 the other day, and right now we're just sitting at pretty much oversold. So I suspect we're going to get a rally sometime soon. However, I don't see a reversal candle on the daily chart here. There's nothing that tells me there's a reversal candle here. So that is something to kind of pay attention to. But that goes into the thesis of this gap down. If we're going to maybe gap down tomorrow, just slightly gap down, we might get that reversal candle tomorrow. So keep an eye on that. I took I covered my short and took a small stab to the long side, let's say 25% position. I don't have a whole lot of interest in being fully loaded to the long side because we are in a bear market now. I'd rather, take smaller positions to the upside and then take full size positions with the trend, which is to the downside. So that's how I'm playing that. If we narrow it down to the hourly, let's look here. I mean, that's the thing. Also, this support 160, and I took this long position right at the end of the day because we fell right down to the support and pretty much closed right on support. So that's that means we closed the day at support. You can go long at support. It doesn't mean that we might we couldn't fall right through this, but the bearish sentiment at this point, everybody just, it's blood in the streets. Everybody's freaking out. Clearly, the markets are freaking out. And, usually that's about the time when you see these reversals or kickback rallies, when everybody gets everybody starts panic selling and just selling all their positions, that's usually when you'll see the big institutions come in and buy up some of those positions. So that's what I'm looking for. Nothing crazy. The SPY, dumpster fire city, just straight down. But close to support here, the December 2018 lows. Maybe we undercut these, gap down tomorrow and then reverse higher, or maybe we never get there. Maybe we never actually get to the lows and we reverse short or shy. Like I said, when all eyes are on one level, when everybody's looking at one level, and everybody's definitely looking at this level right here, you're going to do one of two things. You're either going to overshoot it, you're going to go farther and then reverse, or you're going to stop short and then reverse. You're not going to. The market doesn't like to give people a clean entry on a position. It likes to trick people and shake people out. So that's something to watch for. Let's see here. What else do we want to look at? Apple. So this is in my last video. I said, let's look at the daily here. I said, look, we closed Friday right here at support, and I was like, this is a great level to get short. It's right at resistance. It closed right at resistance right here. If you want to know how to draw that line out, just go ahead and go to your 1 week chart and draw out from the very bottom of the 2009 lows, run it up and connect these dots here. This is a logarithmic chart, so make sure you have that set in your charting program. But that's where you'll get that, and then you can see we just tagged it right there, closed it right there on resistance, and then today just gapped lower and sold off, just really bad. So, if you took that trade, you would have had, as of the close, a 13% gain. So not bad. As of right now, I don't see anything bullish in this chart. And I just, you got this level right here. This is a level right here at the high. You can see we had a little reaction right in here, and then that makes the peak right there. So maybe that's support. And again, maybe we fall short or maybe we undercut. But at this point, I can say bigger picture, we're going lower. That's my opinion at least. Tesla, just exactly doing what I thought it would do. Someone asked me, and in the comments I responded saying, look, Tesla's probably going to go down to this 380, 387.50 or wherever I have my level. That's just your range. This is your range that Tesla's been in right there. There's the top of the range. We had a huge breakout, just a parabolic move up, and now you're seeing the crash. This is why a lot of new people, a lot of young traders, or new people getting into the stock market, they get sucked into these momentum trades like Tesla, like Beyond Meat. There's a lot of them. The space one, SPCE, Virgin Galactic one. They get sucked into these thinking that, Bitcoin is an example. They get sucked in thinking that everybody's going to get rich, but what they have to realize is that these moves, these are bubble moves or parabolic moves. The only people making the real money are the people that were buying down here that had the sense to buy it, and then they're selling usually up in here. So when you ride these moves up, you a lot of the time the new people become the bag holders and they end up losing money. So, and that's what this is doing. It's just dumping. It's down today 18%. So yeah, looks like it's heading down there. And most likely, it's going to head back within this range. I think it's actually probably heading all the way down here to 181. I think that's most likely where this is going. And then it'll probably find some support. Here's your corporate bonds, LQD. Catching a little bit of a bid, finding a little bit of support. Let's go to the daily here. I'm not trading these. I just keep an eye on them because that's kind of where the bubble's at. And so I like to, see what's going on. And yeah, you can see we came down, had a kind of a kickback rally, and now we're rolling over more. So this is going to cause some real issues. What I'm telling people that are close to me who have, who have pensions and stuff, this is going to affect the pension funds. And just to go off on a little tangent for a second, the pension funds, you have to understand that a lot of these pension funds need about a 7%, 8% return per year in order to stay solvent, because they have a huge demographic problem where they've got a lot of baby boomers retiring and starting to draw on the pension and not as many people contributing. So they need a good return, 7 to 8%, to kind of stay solvent and continue to make those payments. And they haven't been able to achieve that over the last decade completely by following kind of their traditional mandate, which is, stocks and bonds. Typically they have to buy treasury bonds a certain percentage. They can't just go out all in the stock market and take on a ton of risk. So they've had to buy, they buy treasury bonds, but the treasury bonds haven't paid any interest, because the Fed has dropped interest rates so low. There's been no interest. So the income that they're generating on those bonds hasn't been that great. And so what they've had to do is go out into the corporate bond market and buy investment grade corporate bonds, which is what this LQD is. This is, investment grade corporate bonds. And so they've had to go out and buy these. Well, with this recent just plunge here, that just is doing a ton of damage to the pensions, because they've experienced a stock market crash and a bond market crash at the same time. And that is going to, that's basically going to blow up some pensions. It's going to cause them to have to come out in the next 3 to 6 months and probably reduce benefits and, cause a lot of problems. And so I think we're going to see that coming in the next 3 to 6 months. That's going to be part of the next leg in this bear market or recession. I'd look for that. You don't see moves like this in the bond market, the corporate bond market, unless you're in like financial crash mode. Last time we saw that, you saw a little bit right here, but not even nearly as big as this. This is just massive. If I go to the weekly, it'll show a little clearer. This is just straight down. And the last time we had a move like that was back in 2008, the Great Recession. So that's what it looks like happening or about to happen. So keep an eye out for that. All right, let's move over to gold. And let's talk about that. All right, so here's gold bullion. And we had a little bit of a recovery today in gold bullion. You can see here that we fell right to, we just undercut 1500, or sorry, we fell to 1450, and we kind of opened up down there. This was all pre-market. This happened right, kind of a couple hours right before the market opened. And then when the market opened, it just bounced right off of that and rallied. And we closed above 1500. So that's key support, 1500. Nothing necessarily on my chart, I think, that marks out on 1500. Let me look at the daily here. Let's see how it actually charts out. No, there's nothing. No, well, yeah, we got a little bit right there, I suppose, but yeah, that's not the cleanest. It's not the cleanest level, so we'll probably just leave that off. So for now, we're just gonna say, let's look at the bigger picture. Gold's still in an uptrend. All right, we've got lower lows. There's one here. Here's a higher low, and an equal. Well, actually a higher low if you want to look at kind of how that day closed. So a higher low there. So still intact. We have higher highs, obviously. So now we should see gold rally and break this 1705 level and make a new high. Doesn't mean it's going to happen, but that's what the trend tells me is going to happen. So we have to stick with that trend. Here's Barrett Gold, big reversal day, bullish engulfing candle. Let's go to the hour. Well, we'll go to the daily, but we opened way down here in Barrick, down like 15%. You can see right here. Here's your previous close, I suppose, and just massive rally, and it's continuing to rally in the after hours. But we basically gapped down way here, and the buyers were just right there, myself included. I added a little bit of position, a little bit to Barrett Gold down here, and we just rallied straight up. And if we look at the daily here, here's kind of your bullish engulfing candle. This big line. I'm not sure why it's not showing up as a solid green line, but anyways, it starts all the way down here and goes all the way up here. Maybe the charting program's still behind, but it goes all the way, up there. So it went to a high of 1713, but basically bullish engulfing, engulfed the bearish candle from previous. Not an outside day. If it closed all the way up here above this this last candle, it would have been an outside day, which is usually a pretty good candle for a reversal. But now we need confirmation. A bullish or a bearish engulfing is kind of a heads up, and then you want to see your next candle confirm. So what we would expect to see is tomorrow a good green buying day. Doesn't have to be huge, the bigger the better, but for the most part, just needs to be a solid buying day above the highs of the previous day, right? Previous 2 days, right here. So anything, if we can close the day above 1761, that's pretty bullish. Ideally, we can close above this 1806. That would be, kind of the next resistance level that I see right there. So we'll keep an eye out for that. Oh, we also have, it looks like we've got a little bit, yeah, we'll just leave it right there, 1806. So, and on Barrett Gold, you can see bull trend still intact. You've got, here's your lows, you've got higher lows and higher lows. I can't see where we closed, right up in here, and higher lows. So bull trend still intact. And so what did we accomplish during this pretty brutal sell-off? Well, we flushed out a lot of the weak hands, because that's what happens in bull markets. You continue to have these flush out moves, and we filled the gap right here. Here's your gap fill. Filled the gap. And so that was an area that I was looking to add to my position, and I actually got it a little bit cheaper. So and we kept the bull trend intact. So technically no damage has really been done to this chart. Still looks bullish. Can change on a dime, but as of right now, still bullish and still looks good. So that's that. Hopefully anybody who's kind of trend trading this thing didn't get washed out, but that's my read on that chart. AEM, this one doesn't look as good. This is this NUGT Eagle, only because we had this, here's like an uptrend right here, and it's relatively good, and we closed below it, so we haven't been able to recover that. So this doesn't really get bullish until we can recover this trend line. If we can recover it, hold there, and then start to move higher, that would be bullish. Let's look at this JNUG. This is a trade I took yesterday right at the close. I took this, here's your 1 hour, and basically what I was looking at, let me go to the 1 minute, because this thing is moving like crazy. You really have to look at the 1 minute. Okay, so here's the level that I marked out right there. You can see the post market's just gone absolutely crazy in this thing. But here's your... We were selling off, and I grabbed this thing. It was way overdone, so I grabbed it right down here at the market close. And then today, pretty much just a ramp day. We just launched higher and came right up to that area that I was looking at. Let's see, where was I looking at? My sell point was right up here. Right there. You can see there's your support. And what I was looking at is, you can see, yesterday it came down and held that support, held it, and then we broke. So what I was looking for is a run up to tag that from below, and sure enough, that's exactly what it did. It just ran right up and tagged it. I sold the position right there and made almost 100% gain on that trade. I only took $1,000 out, but not bad for a kind of a single day. And I've got a heavy gold position, so I don't need. I can just, this was just a day trade basically for me. But yeah, that's how you do it. So that one is still running. You can see in the after hours it's at 940, which is, right about there. But for the most part, it was almost at that point today as well. It gapped up, it started to run higher. And I tried to get in on this spike right here and just catch a quick move, because you could see it tagged resistance, tagged it, and then finally just broke. So as soon as it started to break like that, and it broke right here and failed. I actually took the trade right here, and then it failed. I got out really quick, and then when it did it again, that was kind of your tell. This was your fake out move where you thought it was going to go, and and then boom. But I sold it right there, and then I was busy when it did this. I didn't have an opportunity to jump on it, and sure enough, it spiked right there. And if you would have grabbed that one, that would have been a 15. If you got the full thing, 15% gain right there. Not bad for a quick 3-minute day trade. But those kinds of moves, typically you want to fade those. Like you'll get the spike. You can take the breakout, but you want to sell into that because usually those fail. I've seen those things just spike and then they roll over. Everybody sells when those things happen, so it's just a profit taking thing for day traders. So that is that. Silver does not look good. I am just not interested in silver right now. Maybe I'll get a little more interested here soon, but for the most part, silver, let's look at silver. Yeah, see, silver just did not have a good day. The gold miners were up. Gold was doing pretty decent, but silver just got taken to the wood, taken to the whatever you want to call it, taken out back and shot 3 times. This is just a wheelbarrow and shovel looking chart. And, this looks to me like it's in a bear market. I don't know. It's just, it's continuing to make, you've got this low, right? Yeah, I mean, we broke to a new low right here. So this looks like a continuation of a bear market. So I don't know when this thing's going to end, how much, I think it's probably close to being sold. Look at the RSI here on the daily on this SOV. It's down at 14. Usually when it gets down there, like here, it got down close to there. You didn't have a pop right there, though. It just kind of held and then went a little lower. Silver can just really get smashed. So that's why I'm more interested in kind of the peer play, which is gold miners. I'm more interested in that than silver, looking at those for kind of this inflation play that the Fed's going to possibly create. The Fed's doing all they can to just dump as much money, and they're probably going to come out with another announcement of more money, another larger QE or stock buying program or something pretty soon. So the whole play for the gold miners is based on them doing that. And so far they continue. They're doing exactly what we'd expect them to do, and that should continue to devalue the dollar. So let's look at the dollar here, see how it did today. Dollar was down roughly, not a ton, but it was down on the day. Here's your hourly. Kind of chopped around sideways a little bit, but for the most part, it did sell off. So we'll have to watch that, see where that's going. I think the dollar should start to weaken once bond traders probably realize that they can no longer really make any kind of real returns in bonds. Then they'll probably start to exit the dollar. Because bonds are basically future dollars. It's a promise to pay dollars in the future. And when you can no longer make any money from bonds, you're probably going to go ahead and start exiting that trade. And that should put weakness on the dollar. That's all I got, guys. That's the rundown. There's a lot to watch. There's a lot to kind of analyze and understand in these markets. But if you're able to read these charts and really anticipate what's going on and understand what these little bars mean about the market sentiment, about people's mentality, it will help you really stay, either establish a position or stay positioned when they start to try to shake you out. There's always going to be shakeout moves. When you're trend trading something, when you're swing trading something, there's always going to be shakeout moves on that within that trend. They want to constantly shake out the weak hands, and for people that want to be, for institutions that really believe in a position and are strong hands, they don't want the less people riding along with the trade, the more money and the higher up it goes when everybody piles in. So they constantly want to keep you guessing, keep you doubting yourself and shaking you out. And that's what they do in gold. The gold miners are notorious for that. They'll shake you out like crazy, make you think you're completely wrong, and then just go on to rally 150, 200%, 300%, straight up. So if you're able to kind of read the chart, understand that, the trend is still your friend here, then you'll be able to withstand some of these shakeout moves and potentially even add to your position when you're getting these big sell-offs. So until these gold charts change and gold in general changes, which it could easily, you know. I mean, I'm not saying it's not going to. I could be wrong. But until that happens, we have to stick with it. So thanks, guys. Give me a thumbs up. Leave me a comment on maybe some trades that you guys are doing or some stocks that you're interested in. I don't think it's time to buy stocks yet. You know, I think that the market is still I think we're in a bear market. And, well, we are in a bear market officially, but I think this is the first leg down. How far it goes, I don't know, but I think we'll have a kickback rally and then we'll make our next leg down. And that could play out over a period of months, you know, 3-6 months, who knows. So we have to kind of stay nimble, but know that the bear market, you know, won't just end with a 20%, 28% down plunge. You know, most likely we're going to rally and then we'll have another leg down and we'll rally a little bit, have another leg down. And then maybe we'll start to talk about the bear market ending and start looking for long opportunities. But we have to see the charts tell us that. And right now they tell me that the stock market's not done selling off. So, all right, guys, catch you on the next video. Bye.